Dr. Reddy's came out with their numbers, operationally extremely strong set of numbers, EBITDA margin coming in close to 19%. The street was anticipating close to 16% here. The top line was slightly disappointing. So let's speak to the management. Soumen Chakraborty of Dr. Reddy joins us. Thanks, Soumen, for joining us on the show. First of all, I think the overall top line was something that disappointed. The US market sales also was slightly disappointing. What's the reason for a little disappointing and weak US sales? Because the street was anticipating that, you know, the bottom has been hit and perhaps a better performance could have been expected.
So in USA, specifically that Sevelamer launch, which has happened on 29th of September, which is beyond our due date for cutoff. So that the revenue recognition of that has not happened in this quarter, which will only happen in the subsequent quarter. Price erosion is continuing, and so the base business is definitely, under pressure because of the continuing price erosion. So it is only the new product launches which can offset, and then you can hope to do a better performance in North America. So based on some of the launches which we have done in this financial year, and that we expect, better traction in Q3. So hopefully, U.S. market in terms of revenue, we will see better traction going forward. So Q2, that way is a decline from Q1 in U.S. market. If that would not have happened to that extent, the revenue would have been better for us.
So which are the products that you're talking about that, will see traction in the next few quarters? It's been the first half of the year is complete. So which are the important products that have been launched in this quarter, the last quarter, probably will help you gain traction in the third quarter now?
See, Lipodox, for example.
Okay.
Maybe we can see a better traction in Q3. Then even Sevelamer, as I said, there was no revenue recognition in Q2. So whatever we have been doing in Sevelamer, the impact we will be able to see in Q3. And then, of course, in Q3, we can just hope that further new product approvals happen and we are being able to launch. So all these can help us in North America. But what we have seen vis-a-vis, quarter one, definitely the India business where the GST transition impact led to a very low performance in India market, and also the PSAI. These two sequentially has performed, much better. PSAI, the problems are more in terms of the supply rather than the order book. So this quarter the supply has been better. So with that the PSAI has improved. And India, there have been a partial recovery of the GST-related, transition-related impact.
No, but overall, India seems to also have been weak, because if you take all the permutation, combination, all the adjustments, you and the press release have indicated a 10% growth, which is much lower given the fact that, the pharma industry does talk about that restocking has totally happened after the destocking that happened in the first quarter. So why has India not recovered?
So India, yes, our growth would be around 10%, which we'll have to see that, how we can grow further. But given, the kind of products that we are having in India market, and our expectations will be in that range. So maybe, 10 to 12% growth could be, in a short term could be a reasonable expectation from India.
Okay. What about Russia also? Because on a constant currency basis, that's grown by close to 13%, despite the fact that you had the benefit of rituximab tender that came in. What went wrong in Russia?
Rituximab tender, there will be quarterly fluctuations. So Russia, that way, Q1 would have been, better off with the rituximab tender quantity compared to the Q2. So there could be some fluctuations, but year on year, Russia is doing well. I don't find any specific concern on Russia. Overall, emerging market is not going to disappoint us.
Okay, what's the ANDA pipeline for Dr. Reddy's, and which are the key drugs that will come in the next 2 quarters now?
See, basically the Teva pipeline will be interesting to see in coming quarters. Apart from, of course, Aloxi, we'll have to see whether we get an approval or not. And then Copaxone is also in a similar bucket. So there are very interesting molecules, in terms of the quality of pipeline that we have is quite interesting. We'll have to just see that, how do we get the regulatory approval. Of course, because of the the warning letter impact and the facilities, some of the high-value launch we are continuing to, de-risk. So that has an additional task on hand. We do it for, what is coming in the next financial year. We start de-risking now. So that is an additional task which we continue to perform.
Now, which gets me to this, you spoke about the issues at your plant. So what's the update there as far as, because 2 of your plants are under problem currently, Duvada as well as Srikakulam. So what can we expect going ahead? What has the FDA communicated to you? And when can we expect any kind of resolution there?
So Srikakulam, the audit happened with only 2 observations in their Form 483. So when he reached out to US FDA, they have not expressed any concern on this specific audit outcome. But they seem to have some queries on our warning letter response commitments that we made earlier. So we are hoping to get those specific queries so that we can respond to them as well. And that would be the update from the Srikakulam. So far as Duvada facility is concerned, in most likelihood, US FDA will come and re-audit. And we are, really trying to do everything possible at our end to improve. Given a sterile facility, whatever learnings that we had over the years, we are trying to do everything possible to improve. So probably, our expected timeline is that maybe end of Q4 we can expect a re-audit from US FDA.
Okay, what about, I was noticing that the margins came in much higher, but that was an account of lower R&D costs this time around. So is this the new normal, that R&D cost will be lower?
That's not entirely true, because maybe one part is this quarter there has been some deferment. So there is no change in R&D strategy as such. And as we said last time also, that overall for the year on an absolute basis, we would expect around about $300 million to be spent. Only change is the last year, first half we would have spent higher than the second half. This year it could be just the opposite. But R&D we are continuing. There have been some improvements on the G&A productivity, and part of that is due to our efforts that we also said last time, that we are going to put a lot of effort in terms of optimizing our, the structural cost and the spend. So there have been some early benefits which are there. But EBITDA that way, in the EBITDA margin, there is a good recovery from the problems that we had in the Q1, but still at 19 plus kind of a percentage, I still feel is a subpar performance for a pharmaceutical company. So there is scope of improvement, and we will try.
Okay, and my final question is, what can we expect for the balance of the year or FY18 as a full? Because, most of the pharmaceutical companies post their 4th quarter had indicated that they see a revenue decline. Some of them said single digit, some of them said double digit. Lupin in his conference call said that they believe a single digit guidance is still on the cards. So what can we expect for Dr. Reddy's now?
So North America generally, the price erosion in double digit could be very much a reality. But so far as our position is concerned, I think compared to Q1, we have declined in Q2, but Q3 we should see improvement based on what I earlier indicated, the products that we have already launched, plus if we can further launch. So hopefully, the second half in North America could be much better than the first half. Now, having said that, similarly in India also, the quarter one was a disaster that way because of the GST transition. So second half, we expect it to be much better than the first half. PSAI, the order book is there, so basically it is about our ability to supply, and so we just hope to keep whatever recovery they have made there. And Europe, there is some problem because of the FTO2, which the German regulatory audit which has happened. Now that roughly would have contributed to about 20% of our Europe supply. So the Europe we have been witnessing very good growth because of some product launches and all. So going forward, we'll have to just watch out the Europe part. But emerging markets, I'm sure, emerging markets, there are new markets, particularly Colombia, Brazil, even Algeria. There are tractions that we are going to see there. So overall, we hope that the second half is better than the first half.
Okay, let's hope that happens, Somin. Thank you so much for speaking to Bloomberg Quint, and all the best for the third quarter now.